Every business owner, CEO, and HR professional knows that information pertaining to the employee pay is extremely important. A major part of an employee's experience with their employer is shaped around how they receive their pay. An employer can be faced with major reputation risks if employees are not paid appropriately and correctly. In this session, we will evaluate the information around pay that should be included within the handbook. The items we will cover will include employment classification and categories, pay schedule, payroll deduction, salary review and increase policy, and pay related to performance.
An important place to begin when discussing pay information within an organization is to define the employment classifications. The Wage and Hour Division of the Department of Labor has implemented the Fair Labor Standards Act, or FLSA, to define employee classifications, establish minimum wage, and create youth employment standards. The two employee classifications that the FLSA has created are exempt and non-exempt. Essentially, the classifications determine whether an employee is eligible for overtime pay within an organization. The exemption classification of a position can be determined by two methods of using the salary test and the duties test. In order for an employee to be classified as exempt and not eligible for overtime pay, the employee must be compensated more than $23,600 per year, must be paid on a salary basis, and must perform exempt job duties. There are three typical categories of exempt job duties, which include exempt executive job duties, exempt professional job duties, and exempt administrative job duties.
Information around the details for each exempt job duties category can be found on the FLSA site below in the Resources section. If an employee does not meet the requirements of being compensated more than $23,600 per year, being paid on a salary basis, and performing exempt job duties, then they are considered a non-exempt employee. Non-exempt employees are eligible to receive time and one-half their regular rate of pay for each hour worked over 40 hours in a work week. Organizations are required to record the time worked for non-exempt employees in order to pay overtime. As a recap, the following information is critical to include in the employee handbook: a clear list and definition of employee classifications and categories, define the work schedule of the organization, example, 40-hour work week, Sunday through Saturday, beginning and ending at midnight. Define the criteria for meal periods for non-exempt employees. Define the policy for break periods. Establish that non-exempt employees will be compensated time and one-half their regular rate of pay for any hours over 40 worked in a work week, and provide information for how employees are expected to submit their time worked through the organization's record-keeping process. The next item to include is information around the pay schedule for the organization. Organizations may choose to pay monthly at the end of the month, bi-weekly at the end of the week, or on the 15th and the last day of the month. It is important for employees to be aware of the pay schedule in order to plan their personal finance schedule. An important note is to provide information for how pay will be scheduled if the payday falls on a holiday.
Payroll deductions are another important item to include in the pay information section of the handbook. Required payroll deductions and voluntary payroll deductions are the two categories to consider including. Required payroll deductions are federal and state laws that require the organization to make certain deductions from the employee's compensation. Included in these are federal, state, and local income tax. The organization may also be required to deduct garnishments as required by certain governmental agencies for child support, delinquent federal or state taxes, and other local taxes as required by law. The organization may offer programs and benefits beyond those required by law for employees to voluntarily elect deductions from their compensation. These may include the selected medical benefit costs, local outreach organizations to support the community, any gym memberships associated from the organization, or any retirement plan offerings from the organization as well.
Some organizations have a defined process for reviewing and increasing the salaries for employees. The review may be conducted annually, and employees are eligible for a certain percentage amount increase to their salaries. The amounts may be determined at a discretionary level by managers, or each employee may receive the same increase based on the overall performance of the organization. If your organization offers any review process such as this, then the details should be included in this section. Additional resources around the information covered in this section are included in the resource section below.